Welcome back everyone to the Money Control live stream. You are watching Markets with Santo and CJ. Well, we had a great start to the day, but it seems like we have given off a lot of those gains. But one thing is certain, that we are going to end this wretched week on a positive note in this market.
Well, CJ, even if we end this week on a positive note, I would still be, wary of any bounce back in the coming days. You see, we've been seeing plenty of false dawns for the last 2 or 3 months now, right from the time, in March when the markets were supposed to have made a bottom when Russia invaded Ukraine.
Santo, have some faith in this market. I'm telling you, bulls are sensing a comeback. We did not test the March lows in today's session at all, and we have managed to hold on to all of the gains, most of the gains, despite the sort of earnings that came out from SBI. There was a little bit of a negative surprise in SBI's fourth quarter earnings, with slippages coming out higher than what people were expecting and increasing on a sequential basis.
It was a mixed bag, though.
Yeah, and that took down the bank Nifty, and because of that, given the high weightage that financial services have in the Nifty index, we saw the index coming off considerably from the day's high, and at one point of time threatening to actually go in the red. So I am pretty pleased that the bulls have managed to hold on to their ground, and we look like we are going to snap the 5-day losing streak that we were in. If you look at global markets also, they were largely positive. Europe was largely indicating a positive start, and the fear gauge, more importantly, that the India VIX fell about 5% in the session, which basically is suggesting to me that there was a bit of short covering happening in this market. Probably some bit of profit were being taken by bears in this market.
And in the worst of bear markets, shares don't fall in a straight line. So you're going to see some bit of short covering at every level.
Yeah, definitely. It's not like today's gain just means that everything is great in this world, right? But probably today's move will be something that the bulls would like to build upon on Monday, and you will have to see that follow through coming with a higher volume as well on Monday, to probably indicate that maybe we have seen some bit of reversal or exhaustion in selling in this market.
That is what I would call a hope trade, though.
Yeah, but in the global markets also, something that really interested me was the decline in dollar. I mean, after a long time that the US dollar index has shown considerable weakness. Not just that it's flat or a little down, but the US dollar index was down about 0.5% against a basket of currencies, and that goes to show that risk appetite is slowly and steadily coming back.
I think you're reading too much into a 0.5% decline. Remember,
0.5% is a lot for the US dollar index.
But look from where to where it has risen, and then have a look at the broader picture. But see, CJ, at this point, the bigger concern is that sentiment is pretty bad. It's taken quite a bit of knock because of the brutal selling that you've been seeing almost for the past couple of weeks now. That being said, people having seen their profits shrink considerably would then be tempted to quickly take profits every time a market rises, and that is what is probably going to limit the upside at this point of time. The mood is very clearly cautious. Also, the weak rupee and the sustained selling by foreign institutional investors, these are two of the biggest concerns right now. The moment direct flows kind of begin to ease, even flows into lump sum into mutual funds start easing a bit. In March, probably a lot of money also would have entered through the lump sum route, but that might take a hit if you're seeing this kind of a fall, and that is going to be pretty bad news.
But SIPs still remain quite strong, so I would still be banking on those flows to not turn negative over the coming months. That said, let's quickly dive into some of the stock actions. We had a lot to ponder over given the sort of moves that we were seeing in the small cap, mid cap space, as well as some large caps. Starting off with one of the biggest jewelry makers out there, Titan. It had its analyst day earlier today, and wow, what sort of a commentary and outlook that the management came out with. It laid out a plan for the next 5 to 6 years, in fact, in terms of its jewelry business, its handbags and ethnic wear business, as well as watches business. The company has indicated that it's going to more than double the sales of its jewelry business from the FY22 level by FY27. If you look at the outlook that they have given, in terms of their watches segment and the ethnic wear segment, where they are expecting to clock sales of more than 1,000 crore going ahead, which is multiples of the current revenue, level of these segments. So it seems like, when Titan's Q4 earnings came, Santo, I was listening to the con call, and we discussed this on the show as well, that Rakesh Jhunjhunwala, who is one of the one of the biggest individual stakeholders in Titan, he had urged the management to do something about the watches business, which is fast track, and probably get into, you know, more products like women's bags and ethnic wear and stuff like that, which basically craves, you know, appeals to the younger generation that is there. And it seems that the management has heard him. I mean, though, if you look at the outlook that they have brought out for the watches business, which has been struggling for the past few years because of probably lack of investment, a little bit of loss of market share to competition. But this outlook, this analyst day meeting has totally turned around the sentiment on Titan, and the decline that we have seen in the stock after the earnings, it seems like all of it has almost recouped.
Well, I think there's some bad news for you. So this week is not going to, this wretched week as you called it, is not going to end on a positive note. So it seems like at this point, the Nifty slipped into the red and now it's once again back up, but it's just struggling to stay above the flat line.
Yeah,
CJ.
this market is not giving anybody an iota of hope at this point of time. It seems we have broken below the 15,800 level, which was seen as a decent support for the market, and now it seems the next support will be 15,672.
Yeah, 15 points down on the index at this point. Well, coming back to your point on Titan, you know, CJ, the fourth quarter numbers expectedly was, you know, well short of market expectations. And the general view was that, you know, going forward, you know, as the weddings season, you know, gathers momentum, you could see the company's top line once again showing growth and also improvement in margins. But right now, if you look at the current environment, you know, any consumption name, right, is not a very safe place to be in. And you will see that the pressure on margins is likely to sustain for some more time. Now, the pressure on margins itself is not a bad thing, but the fact that the market in this environment, bears typically tend to target those stocks with very high valuations, and unfortunately Titan falls in that category. So while, you know, I take your point that there could be some kind of an improvement, maybe it will, you know, diversify, get into all those other businesses and do wonders for its top lines, but you can't ignore margin pressures in this market and the fact that valuations are pretty high at this point.
Santo, if you're talking from a 5-year point of view, the sort of growth outlook that the management is giving out there, in my view, that totally justifies the premium. I am willing to pay over the bank, you know, to get that sort of a growth in a market from a blue chip stock. I mean, you always talk about blue chip, right? I mean, there cannot be a bluer chip stock out there in the large cap space than Titan, and so therefore for me this is a very good start.
You're selectively quoting me. I also say that even if it's a blue chip, even it's a value buy, you know, it always makes it different as to what is the price that you're willing to pay for it. Anyway, moving on to the next stock, that's IRCTC. The stock saw a good bounce back today, but you know, CJ, I would be very cautious about buying into this bounce. I'm still not convinced about the story. Of course, high valuations is one of the reasons, but the other thing also is that we're still seeing a lot of short positions in the futures, which is not yet being covered. Also, if you look at the stock lending and borrowing window, you know, there's a short position of outstanding position of about 2 million shares, a little over 2 million shares. So clearly, you know, smart money seems to be negative on the stock, and a combination of high valuations and technical indicators, I think, could, you know, see the stock plunging even further from these levels.
Broaden your horizons, my friend.
Oh,
Don't
yes.
be so myopic in your view of IRCTC. I've been telling you this for a very, very long time. It has registered a very strong buying interest today, and I say that because if you look at the delivery volumes that were available till 2:30 p.m., they were considerably above the 20-day average, which goes to show that there were good buyers who want to hold the stock for a longer term, making entry at after a very, very steep correction in the stock prices, right?
Or is it people who are, you know, were stuck at higher levels and trying to average their positions?
I doubt that. I mean, even if they were buyers for a very, very long term, right? So if long term investors are seeing an opportunity to actually get a good stock with a good earnings potential on the cheap, why not? Why not take that bet, right? And you talk about earnings potential. Reopening of the economy has been, you know, a dominant theme in 2022. We have seen what it has done for multiplex shares, hotel shares, and all that. IRCTC is a proxy to all of that, right? With travel rising, with overall, movement of goods and services rising in the economy, IRCTC definitely benefits from all of that, and we have still not hit peak vacation season yet. There's still 15-20 days to go for that. Then the summer season, the winter season will come, which will probably give another boost to travel in the country. So, from a fundamental point of view, IRCTC is on a solid ground. But now with the valuation, the crack in valuation that it has seen with the general market, I believe that this is just a no-brainer stock to get into. It really is. Another stock that is now emerging, on the sidelines, probably of a lot of value buyers or value investors out there, is Paytm. Now I know value and Paytm in the same sentence, it basically drives you up the wall.
No. Every stock, at some price there is value in it. So
absolutely, and I think at current prices, given that so much of the pain is now being reflected in the stock, right? There is nothing new in terms of negativity that has come out for Paytm in the past 6 to 7 weeks. Much of the story, if you talk about on the negative side, is already laid out in front of investors. The price action is already there. So therefore, the recovery in the stock that we saw today gives me some hope that this could be the start of a new cycle or a new life for Paytm on the stock market, right, on the bourses. The IPO is done, the negativity is out there, it's not totally known. Now probably investors can start focusing on the fundamentals of the business, and all indications are, if you go by the business update that the company came out in April for the March quarter, all indications are that the March quarter earnings are going to be quite good. The company has already given a guidance that it may turn profitable X of its ESOP cost by in another 6 quarters, and it is very likely that it might actually happen before the 6 quarters are completed. So if you look at it from a a longer term play, or sort of a positional play, Paytm makes a lot of sense. And let's remember, US bond yields have started to correct a little bit, right? And if what market is telling us that probably bond yields will head lower, then Paytm becomes an automatic buy, because one of the major reasons given for the correctional stock was that globally yields were rising and therefore valuation ought to come down for a loss-making company like Paytm.
Well, the cut in the market is getting even deeper. Nifty is down by close to about 66 points.
Yeah, and it's the banking index that is leading the losses.
Bank stocks are taking quite a bit of a beating at this point. Okay, let's get on to Paytm.
Yeah, hit me with it. I know there is a long list coming.
About these value investors emerging, they've been emerging since November probably, when the stock got listed, and at every lower levels they thought, okay, this is it, no further, and yet the stock continues to surprise, though not in a very positive way. Now look at the stock, in this market again, maybe Paytm is a value buy at these levels, but the market sentiment is against the stock at this point in time. Look at it, 5 times price to book. You have something like a Bajaj Finance which is about 6 or 7 times book. You have HDFC Bank and other other big banks which are about 3 to 4 times book. Okay, now Paytm also has aspirations of getting a banking license at some point.
No, it does not. It does not. The company has categorically said in the previous quarter that it does not want to get into NBFC business anymore, because it's doing pretty good just being a front for a lot of the banking partners to sell loans. So therefore now VSS had that, Vijay Shekhar Sharma had that dream of having an NBFC license and probably later becoming a big bank, but it seems like those dreams have been put on the back burner.
So then all the more reason that probably you might not see that kind of a big upside which earlier market was trying to factor into the stock.
But Santo, you're also missing out that Paytm is just not a lending game, right? Lending is actually a very, probably considerably a less contributor to revenues than the payment side as well as the commerce side. Now this quarter commerce came back, right? Ticketing business has come back pretty strongly because of people going out, buying traveling out there, buying movie tickets, especially if you take out January, especially the February and March month. So that side of the business is also going to come out, and the outlook for that business is also improved, given that it is very unlikely that we will probably have more lockdowns and more waves going ahead. So in that sense, probably the current level of valuations are too depressed, and market sentiments can change from time to time. You know that better than anybody else, right?
Well, at the same time, there's also no disputing the fact that investors want to stick with companies which offer better earnings visibility. This year probably you may see Paytm's losses narrow down further, but 6 quarters is actually 18 months. That's a long time in this market.
Better off than at least 4 years that a lot of the analysts were expecting.
Well, RBL Bank is the next one that is on our watch list. Now CJ, most analysts had almost written obituary for this bank, not long back,
Yeah.
and that suddenly there's
some are still writing them, by the way. I'll get to them.
Okay, So there's a sudden change in sentiment. The bank announced its fourth quarter numbers yesterday, and they turned out to be better than expected, and it's making accelerated provisions, and as a result of that, it's on a much firmer footing than it is as it enters into FY23, and that's leading a lot of analysts to turn positive on the stock.
Santo, for me, I take it that RBL probably is trying to get its act right in terms of improving its provision, in terms of reducing its improving its asset quality. But if you look at RBL's provision coverage ratio vis-a-vis some of the other banks of its size, it's still lagging behind. That means it has to do a lot more in terms of provisioning going ahead in order to convince the market that it deserves a multiple of more than its book value, right? On a forward basis. Now, that is one side of the story. The other side of the story is that if you look at the internals of the bank's performance in Q4, the operating profit shrank about 11% on a year-on-year basis, which tells you what? That in order to grow, we know that net interest income grew, right? So in order to grow, the bank is spending much more than many of its rivals out there, which cannot be a sustainable business model.
No, it had higher operating expenses because it is in the investment phase, and also it made a conscious decision to actually degrow its unsecured book, which is also one of the reasons for the earnings miss.
Okay, I take your point on that. Maybe let's just assume that that is right. Like, the earnings momentum itself for the bank has been so inconsistent. Before the IL&FS crisis, the banks, was being touted as the next HDFC bank, which almost every other small cap, mid cap bank which has a good earnings momentum for a few quarters tends to be given that moniker. Now, over the past 3 to 4 years, the earnings momentum has been very uneven. The return ratios are underperforming a lot of its peers, even though some of the peers actually were worse off if you talk about the PSB space. So for me, this is not really a convincing bet. Yeah, maybe the market sentiment has turned around for the time being and you could make some trading profits here and there. But if I'm talking about profits in 6 to 12 months, maybe 18 months, there are better bets out there in the banking space.
Well, Campus Activewear is another stock that's taking a beating right now. Stock down about close to 6% after a fairly stellar debut earlier this week.
Well, one stock that is not taking a beating, Santo, is Nazara Tech. Much like Paytm that I mentioned earlier, it seems like tech names are getting a lot of revival sentiment right now, and probably a lot of bargain buyers are heading into this stock as well. The stock fell considerably from its highs, given the sort of numbers that it brought out in December quarter. The main reason of concern was basically that Kidopia, which was one of the major verticals which was driving its earnings, that was facing some slowdown in new user acquisition, largely because of change in policy of the Apple Store, right? Now, let's keep Kidopia aside. The other side of the business, which actually was getting it the sort of multiples that probably made people like you very skeptical on Nazara, was the esports business. Now, esports is something that is still a developing market in India. It's a very nascent market, but it's a very fast growing market because of its low base. Now, I feel that if if the company gets the esports act right, it probably will overtake Kidopia very, very soon and probably continue to dominate the revenue profile of the company going ahead. Apart from that, if you look at the Q4 earnings, which are likely to be coming out later today, if they turn out to be good or probably in line with estimates, I think that also will recede some of the fears regarding slowdown in the earnings momentum for the stock. So this is one stock that, although maybe I will still not go out and buy, but it will definitely be on my watch list, because if the sentiment turns, then over the next 2 to 3 years, this is one space I want to be in.
Well, the stock, as you said, it's not taken a beating today.
Because it's actually surged more than 5%, if I'm not wrong.
Well, it's not taken a beating today because already it's been beaten quite badly over the last 6 months. Since October, when it made its peak, the stock has been falling one way and almost almost 50% of what it used to be at its peak. Also, if you see, last 4 quarters, there's been no consistency in earnings. That's a concern for me. Secondly, as I said, in this market, investors tend to stick with companies having better earning visibility, and that is probably where, things might not exactly go Nazara's ways. And if you look at all the technical parameters, something which you like to throw in my face all the time, they are all giving very bearish indicator at this point.
I'll also like to throw a quote that you all often say on the show, and that is that if you find a good quality company which were available at higher valuation and you could not buy it earlier, every correction is an opportunity to get into it. For me, Nazara is a good quality company with a good management, with good growth prospects. And then why would I not get into a stock like that if it is available, what, 62% from its record highs? That's a pretty good trade.
Okay. And what are we missing here, CJ?
Well, probably something, that happened in the US yesterday. So US Federal Reserve Jerome Powell had one of his first interviews after being confirmed by the US Congress as the next chairman of the US Federal Reserve. And in his interview to NPR's marketplace, Powell, it seemed like he was a little uncertain about the soft landing bit, wherein even though the Fed will raise interest rates, they will probably not result in a recession. So there was doubt there. But what really struck me out was this quote that he said, wherein he said that if things come better than we expect, then we are prepared to do less, right? And if they come in worse than we expect, then we are prepared to do more. Now, this, I think, probably should indicate a little bit of dovishness on part of the Fed, because what Fed is trying to say here is that we are totally data dependent at this point of time. In this sort of an environment where macro indicators are haywire and you can't predict anything with a lot of certainty, which the Fed has said over the past 1 year, if inflation numbers in the US end up softening in the coming months, probably the Fed may not be as aggressive in raising interest rates as the market was hoping. And maybe we may not have to deal with the recession fear and a slowdown in the US growth, which usually, as they say, if US sneezes, the world catches cold, which is usually bad for the global markets and including a country like India. So for me, this is a very important thing to keep in mind, that while the sentiment is so bearish that the Fed is going to tip the US economy into a recession, we already know that China is slowing down, that the Russia-Ukraine issue is hanging over our head, and therefore the panic and the negativity. But maybe in these comments there is some hope and silver lining for the market, and it will be very important if investors keep note of that.
CJ, isn't it a kind of a circular argument here? Obviously, if inflation is down, then you don't really need to raise rates, right? I mean, there is nothing new in which you think. But now the question is, what if inflation is higher than what was expected? Don't forget the fact that over the last 18 months, central banks, not just the Fed, every central bank across the globe was behind the curve. So it simply didn't see, the situation getting so bad. So at this point, if they're saying that, inflation, if it's less, we won't hike rates, but there is no knowing that where inflation could head next. Even for the April, the general feeling was that probably inflation had peaked out, but if you see the core inflation in the US, that has also come out higher. Plus, the base effect will may have already started kicking in, right? So optically, it may look as if inflation is slowing down, but they are already at elevated levels. That's going to affect consumer spending, company earnings, and you'll likely see it in the reflecting in stock prices.
Santo, I'm not saying that the Fed will not raise interest rates anymore just because inflation numbers are coming down, right? But let's remember that just a couple of weeks ago, when the market was worried about 75 basis point rate hikes from the Fed, market, it seems, had already started to price in the worst case scenario, wherein the Fed will probably raise rates by 75 basis points for a couple of meetings and then move down to 50 basis points for a few more meetings, and therefore we will probably be as high as 5% interest rates in the US, which is unheard of at least in our generation, right? So if you look at it from that point of view, any sort of a moderation in Fed's commentary would be a positive. Why? Because this could lead to a relief rally. If the market is already pricing in the worst, then probably any sort of moderation in that worst case scenario will be a relief rally, catalyst in the global markets.
Well, before we wrap up the show, Sensex is down now almost 175 points. That's quite a stiff.
I mean, you are also seeing a weakness in the rupee. The rupee actually started out very strong in the morning. It was higher by almost 6 pips against the US dollar, but now it seems down by about 4 pips to the US dollar at this point of time. So clearly, FIIs are still driving this market in terms of sentiment. Their selling pressure is just too much even for the DIs to handle.
So what are you watching out for? What's on the horizon, CJ?
Well, next week is probably the biggest event in recent capital market history, which is the listing of Life Insurance Corporation of India. That will likely take place on May 17th. And if you go by the grey market premium, it seems that there has been a little bit of a loss in momentum. because the grey markets premium for the LIC IPO slipped into the negative territory recently. But this will be one event to watch out for, because if we have a great listing, even if we have a good listing, given the market that we are currently in, that could be a kicker for a positive sentiment in this market. So that is something that, I mean, one should really watch out for. Apart from that, we have data coming in from China. The industrial data, production data will come out from China on Monday. So that could end up dictating a lot of the global markets on Monday. Apart from that, lastly, we have the earnings. We are getting into the last 2 weeks of the earnings season. It has been a long earnings season, and a lot of things have come out. A lot of management commentary has come out. But key earnings that people would really watch out for would be ITC would be there. Then you have Bharti Airtel coming out with their earnings, and lastly, Dr. Reddy's and DLF are also going to come out with their numbers. Apart from that, a lot of mid-cap and small-cap companies are obviously going to report their Q4 earnings. So earnings, of course, will remain in the background and an underlying driver of this market.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. We wish you all a very happy weekend.
Yeah, what are you doing at the weekend?
Well, I'll be driving out someplace.
Oh my God, the luxury.
Yeah.
Anyway, please do comment your feedback on the comment section below, and follow us on the social media links at the bottom of your screen. We will catch you live Monday morning, 9 a.m. sharp. Till then, have a great weekend.
Thank you and goodbye.